Hey everyone, how's it going? Welcome to another video. Today I'm going to talk about a couple option strategies that you can utilize in today's market to create monthly, weekly passive income. Some of the option examples are going to be cash secured puts, put credit spreads, call credit spreads. These are really great strategies regardless of the size of your portfolio. You can use these strategies if you have $1,000 in your account. You can use these strategies if you have $20,000 in your account. They're amazing strategies to utilize in volatile markets and kind of more stable markets. So hope you enjoy the video. At the end of the video, if you found value in it, would greatly appreciate it if you could like and subscribe. That would help out the channel massively. I'm definitely working on getting back to a regular posting schedule. A final reminder, if you have any stocks you want me to cover, feel free to comment them down below. I'm happy to, and hope you enjoy the video. So as I'm sure everyone's aware, there's a lot of activity going on in the banking environment these days. The first two stocks that I'm going to cover are two of the largest banks in the United States, and I'm going to go through some option strategies that you can utilize on these stocks. So the first one we're going to look at is Bank of America, and looking at it here, you can see the 1 month chart is down 21%. So big pullback lately, as there's a lot of questions out there of what's happening in the banking market. So a couple strategies you can utilize on Bank of America. So now I'm going to walk you through how to trade options on Bank of America. So you're going to click the button in Robinhood on the bottom right. And the first thing you're going to do is you're going to want to look at the expiration date that you want to sell or buy options on. In this example, sell. So the expiration dates I typically look at are 30 days to 45 days out. That's when you can maximize theta decay on these options. So I'm going to go about 28 days out, so April 21st, about the third week in April. And as if you recall, the Bank of America chart's going down significantly, and there's still a lot of questions out there of what's happening with banks. So the first thing that comes to mind is, one strategy, if you think Bank of America is bottoming and you'd be willing to purchase Bank of America stock at current prices or slightly below, then selling puts is a strategy that you should definitely utilize. So selling puts, what's going to happen? So effectively, you're saying, hey, I want to buy Bank of America, but I'm willing to buy it at $25, not $27 where it's at today. So you could sell a put, a cash secured put, if you have $2,500. You may be asking, why do I need $2,500? So you need 100 shares to sell one option, or you effectively need the collateral to purchase 100 shares to sell one option. One option is comprised of 100 shares. So if you want to purchase Bank of America at 25 or sell a cash secured put at 25, you have to have the collateral to purchase 100 shares of Bank of America at $25. So the advantage of a cash secured put is you would be collecting whatever this premium is today for selling this cash secured put. And what could happen is two things. One, Bank of America could drop way below $25, and that means you would have to purchase Bank of America at $25, and you would be collecting 67, so it'd be net effective of 24.30, 24.33 break even. So that's one scenario. The other scenario is Bank of America, maybe it dips below 25, but then by April 21st it actually finishes above at maybe 26. Then this option will expire worthless, and this $67 of credit, that's already in your account today. So the option will expire worthless. So those are kind of the two scenarios, and you wouldn't be purchasing Bank of America stock in that second scenario. So that's what you could do if you think, Bank of America is kind of bottoming. This is a pretty significant drop, and it should settle out. Personally, I prefer maybe a different strategy. So I'm going to walk through a second strategy for Bank of America. So I'm going to go to a call credit spread. So what I'm going to do here is, so Bank of America has come down significantly, and you know what? It may go back up a little bit. It may go up a lot. I don't know, but I can still sell this option strategy and collect income in the meantime, as long as Bank of America doesn't rebound significantly. So what would you do for this call credit spread example? So let's say Bank of America, I'm willing to look at a 30 strike price. So here I would sell a call. So I don't own any shares of Bank of America. That's the first assumption. And then I'm going to buy a call a leg higher to kind of protect myself because I don't want to sell naked calls. So now I'm going to buy a call a leg higher. And if we look at 31.50, this is interesting. So effectively you would collect 17 cents or $17 today if you executed this strategy. And the amount of capital you're risking is effectively the spread between 31.50 and 30. So you'd be putting up $150 of collateral to collect 17 cents or $17 because 100 shares times 17 cents. You would collect $17 for putting up 150 of collateral. So that's nearly a 10% return on your collateral in 1 month's time frame. So that's pretty good from a percentage standpoint. You just have to determine how much do you think Bank of America is going to rebound, if it is going to rebound. There's a lot of things out there that could influence the stock movement, so definitely keep that in mind. And also remember, these are just examples. You have to look at what strike prices make the most sense and what premium you are looking to achieve. Now, the second stock I'm going to cover is JP Morgan Chase. So this is one of the other two largest banks in the United States today. And as you can see, this chart also fairly down significantly. So I'm going to quickly walk through the cash secured put and call credit spreads as well that you can utilize on JP Morgan Chase. Like we did on Bank of America, click trade options on the bottom right. The first thing we're going to do is expiration. So I'm going to change to April 21st. And keep in mind, I'm looking at all of this right after hours on Friday, March 24th. So things may fluctuate a little bit if it's live open market. So keep that in mind. Granted, these are all just examples. So taking a look at this cash secured put, I'm going to sell a put. And JP Morgan's at 125, so I'm going to look at 120. It's actually pretty high. Would I be willing to purchase JP Morgan at 120? Here at Delta 0.32, so a little bit high. Maybe you want to look at a 0.15, 0.2. Let's look at a 115. This is pretty good. So if I sell a cash secured put on JP Morgan, so a couple things to keep in mind. You have to have enough collateral to purchase 100 shares of JP Morgan if you're willing to purchase it. So in order to do this trade, I would need about $11,500 in my account today. And if I sell this cash secured put, what would happen is I would collect $194 today to have this option open. So JP Morgan, the key question to ask is, do you think JP Morgan is going to go down another 10 points from what it's already done over the past month? Maybe, maybe not. But if you want to purchase JP Morgan at $115, then this is a great option to consider because you could collect $1.94 today and make your break even or your actual purchase price, if you think about it, $113 approximately. So that's the cash secured put example on JP Morgan. And now let's go take a look at call credit spreads. So I'm going to close out of this. Now looking at these options, you would do a call credit spread if you think JP Morgan's going to remain neutral, not going to shoot up a ton, but you have a smaller account. You may only have, let's say, $500 of collateral or just a couple thousand. You don't want to risk it all, obviously, on one option. So you could do a call credit spread on JP Morgan. So what would you do? You would sell one option like we did on the other one. And I'm going to look here at the 135. So it's a 0.18 delta. So let's sell this option. So this is pretty far out, 10 points higher than where it's currently trading. And remember, we don't want to sell naked calls because then the max loss is unlimited. So then we would switch to buying a call a leg higher. And let's just take a look at the 140. It's 5 points higher, delta's 0.08, so pretty low. So let's add this. So now the spread is 5 points between 135 and 140. So you're effectively risking $500 of collateral. And today you would collect a credit of $56. So that's about a 10% return. And again, 1 month time frame. And you only have to put up $500. Again, you have to consider what's the right strike price for you, which movement in which direction do you think JP Morgan is moving. So these are all important things to consider when you're choosing the strike prices and also the stocks that you're trading these options on. And now a quick reminder, if you liked the video thus far and found some value in it, would greatly appreciate it if you hit the like button. And if you're not subscribed, please subscribe. It really helps out the channel's growth. Now back into the video. The third stock I'm going to cover is AMD. So I've definitely covered this in the past. AMD is a semiconductor business. Honestly, amazing stock if you look at the 5-year chart, all the way down from $11 now up at 98, so a 760% return almost in the past 5 years. So they've been crushing it. As you can see in the past year, there's been this drawdown, but then a little movement back up. If you look at the 1 month chart, it's actually been ripping. It's up 23%. The options I'm going to consider on AMD are actually going to be put credit spreads because I don't think AMD is going to drop down significantly, and I think the forward momentum is still there and will continue to be there in this space given AI and all the technology that's advancing. So let's take a look at these options. I'm going to click Trade AMD Options. First thing I look at is the expiration date. I'm going to go to April 21st, 28 days out. And we're going to look at put credit spreads. So this is similar to the call credit spreads. You're going to have two options at two different strike prices. So what we're going to do is think about, what strike are we willing to sell and execute this option on? So for AMD, it's currently trading at $98. So in a month, do I think it's going to go down to 90? That's a pretty significant drop. So I'm going to use this strike as an example. The delta is 0.25, so that's pretty solid. I'm going to sell that put. Then I have to buy a put lower to protect myself because I'm not selling a cash secured put, I'm selling a put credit spread. So the first leg is 90. The second leg, I'm going to go 5 points lower, so 85. So I'm buying this put. So now I'm collecting $95 today, and the spread is 5 points, so effectively $500 of collateral. So I'm getting almost a 20% return. It would be 20% if I collected 100, but we're collecting 95, so almost a 20% return on your $500. So if you executed this trade 5 times, you would double your money because you would collect $100 5 times. If each time you put up $500 of collateral, you would double your money. You would have a new $500 ready to be using on this type of option strategy. If you want to be a little bit more conservative, we can look at other strike prices. So let's take a look, for example, at 80, super conservative, almost 20 points lower than where it's currently trading. So we'll sell one option and then one leg lower, we will buy. Now let's see what the ROI is here. So here you would get a total credit of $30 for this one option strategy. And again, you'd be putting up $500 of collateral. So this is maybe a 6% return for putting up $500 of collateral in 1 month. 5-6%, that's not bad. If you're bullish on AMD, this strategy can be amazing for you. Again, you have to choose what strike prices make the most sense for you. Now, I'm going to take a look at one more stock today. So Disney's an amazing company. I'm sure everyone's heard of it. Entertainment, media, enterprise, Disney Plus, a lot of different business lines. As you can see, though, over the past year, 2 years, Disney's really gotten beaten up. It's really gotten beaten up a lot. I think this could be a great opportunity to sell cash secured puts on Disney. If you're willing to hold Disney for the long term, it could be a great opportunity. So taking a look at the options, let's change the strike price. And let's take a look at how much money we can make if we sell cash secured puts. And if we have, let's say $9,000 available to purchase Disney. So let's say I'm willing to purchase Disney at $90. I would need $9,000 to sell a cash secured put because effectively I could be assigned 100 shares of Disney at 90. If I were to do this trade, I would collect $173 today. That $173 is pretty solid. It's about a 2% return, 2.5% return if you think about the potential collateral that you're putting up. Now, remember, if Disney stays above $90, this option would expire worthless, and the $9,000 you had in your account ready to purchase Disney would stay there, and you have this additional $173 that was deposited there today because you sold the option today, let's say, for example. If you don't have $9,000, that's totally fine. There's another strategy, which I've mentioned, put credit spread. You could sell a put credit spread. So let's say you want to be a little conservative. You could sell a put credit spread at 85, so 10 points lower than where it's trading today. And you can choose an option leg 5 points lower. So you could choose the 80 strike price 5 points lower than 85. So here you are risking putting up $500 of collateral, but you'd be collecting $42 today. So in 1 month's time frame, you would collect $42. You'd be putting up $500, so it's a little less than a 10% return in 28 days. That's pretty solid. The key question to ask is, do you think Disney's going to end up above $85 in the next month, or will it get crushed and drop much lower than 85 in 1 month's time frame from now? So I hope you enjoyed the video. These are a couple of options, examples on some awesome stocks to be looking at. They're great stocks for long-term buying, long-term holding, but they're also great to create, monthly, weekly passive income using 5 minutes to sell and buy these options and these option strategies. If you enjoyed the video, I would greatly appreciate it if you could like and subscribe. Be on the lookout for weekly videos like this where I go over options, strategies. Hope you have an awesome weekend, and thanks for listening in.